Hello everyone, it's great to be back to talk about our first quarter 2016. Another strong start to a year that we expect to see good solid production, low cost, good cash flow generation. Q1 production performance exceeding 400,000 ounces has put us on track to meet the high end of our production guidance for 2016. We saw strong contribution from LaRonde, and I think this first quarter at LaRonde gives us a sense of what things could look like going forward as we access better grade material in the lower parts of the mine. In fact, LaRonde produced our highest operating margin of any of our mines in the first quarter. Good performance at Goldex, ability to deliver a higher mining rate at that asset, more production, lower costs. Very strong performance coming out of Mexico. Our cash cost to produce an ounce of gold there, under $400 an ounce. That's generating extremely strong cash flow and net free cash flow. If we look at the operating margins generated in the quarter, that's important because that allows us to maintain our commitment to exploration, continue to move key projects forward, at the same time improving our financial position by reducing net debt, which we continue to do in the first quarter. Well, the nice thing about our decision to continue to invest in our business over the last couple of years has put us in a very strong position to benefit from a turn in the gold price. Given the high-grade nature of our reserves, given the ability to grow our output, that allows us to deliver per-share growth in production, per-share growth in reserves, and per-share growth in net free cash flow, which ultimately will drive the stock price. So a lot of that hard work over the last few years in terms of positioning and continue to invest in our assets and our people's good ideas has put us in an extremely strong position to deliver good value to our shareholders over the next several years. We see opportunities at our existing assets to take advantage of unused capacity in our processing facility by increasing mining rate. That's high quality, low risk growth. In terms of the pipeline of projects that we have that are currently under development, we have a major platform developing in Nunavut. Our success there has been driven off of exploration, but also on planning and logistical support of the Nunavut base from our Quebec operations. So we see that as a really important part of our business going forward, the ability to grow a production platform in Nunavut. We find ourselves strongly positioned to deliver that 30 to 40% production growth that we anticipate to see 5 years from now. So these are projects in areas we currently operate in. That means we can deliver that growth in a way that doesn't increase technical risk, that manages execution risk, and as we look at it, that's low risk, high quality growth that we can deliver down to the per share metrics.